Good morning to all traders and welcome to another week, another Markets and Waves video. And today, following of course last week's upside for the dollar, which seems to be some sort of a flow to safe haven, I would say, a run to safe haven. We're gonna have a quick look on DXY, Euro Dollar, oil, gold, as well as the S&P. Started of course with the DXY, we can still assume that we are in the longer term moving down. Waves 2 usually do deep retracements anyway, at least 61.8, but 78.6 very likely as well. So what we're looking currently is for potential and to this fairly soon, because this, if this is part of a, well, if this is not part of the move to the upside, then we very likely to get another leg up, down and then up, and we can literally get to 93.55. If this is a flat, okay, which doesn't really look like one, to be honest, then we're going to have that being 1 and 2, 3, 4 and 5, which means we could potentially have ended here because we would have 5 waves here. So 93.35 break can literally take us up to 93.55, okay? And that would be the 90%. Now, when we get 90% corrections, though, don't forget that they usually indicate a wave B of a flat pattern. Okay, so if we do, then this can be an A, B, and a C flat pattern. Okay, which means that we could literally, you know, have a sort of combination in wave Y from down here. Okay. So we'll have something like A, B, and C. Yeah, that means A, that is the B for flat we will be expecting, and another wave up C. Now, what else though we could have gotten here or looking to complete? Because if we cross above the 80% of the retracement over here, would be a potential triangle, and that would be a running triangle. My wave X would be here, and we'll have wave Y as a running triangle, and that would be the wave A, that would be the wave B, that would be the wave C, the D, and the E. And then we would head down, okay, because that would be W, X, and Y, and in Y we would have a triangle. That is pretty much all of this, okay? This is of course an alternative scenario. We're not just looking at the main. Now the main is, as I said before, still expecting prices to move lower. This correction already seems to be too deep, but we are very near at a point that is critical, and we will know fairly soon whether our main is going to be respected or not. On euro dollar, we are continuing to decline. As you remember, I called for 117.145, perhaps 117 as well the other day. With what I'm seeing currently, 1, 2, 3, 4, 5, yeah, looks like one more leg up and down, it's imminent. Why? Because we've got the first and the second. Internally 1, 2, 3, 4, 5 seems like finished, and then we get the 4 and the 5, which belongs to this structure. Okay, so we could see prices moving down to, well, anywhere between the 78, we are below the 78.6, but even down to 90. But then, as I said before, if we get to 90, the risk of this also becoming some sort of flat pattern is going to be increasing massively. So I would be expecting perhaps to get anywhere below the 117, okay, and from there start moving back higher again. Now don't forget that the flat over here is very easily done if we assume that this wave C, of course, is not going to be just a C. is going to be some sort of combination over here. We're going to get, you know, a W, X, and Y probably. It changes the whole structure and in the longer term. So I'm not sure that is really what we're looking for here. Okay, so it's really critical stage for euro dollar over here. Okay, we want to perhaps take the 117, but we don't want to go anywhere between 116.90. Okay, this will overcomplicate things, and we'll have to come up, of course. We'll have to look at, let's see how today goes, and tomorrow we're going to look at the medium and longer term as well, if that continues to move lower down. Now oil, you do know that you know, we're looking for more upside here, right? Now really need to see, because I don't like this leg to the downside. We really wanted to see wave 3 being larger than wave 1, right? And that is not the case. Okay, we could still assume that this is 1 and 2 and 3 and 4 and 5, but my wave 5 will have to be much shorter than 3 as well, because, well, shorter than 3. 1 for now is longer than 3, and we can see that this is corrective. Okay, so we could get another leg up, but this fifth wave has to be smaller than wave 3, obviously, otherwise it's not going to be some sort of angle to the upside. Now on a different note though, guys, because this is 1 and 2, if we were supposed to be in a wave 3 here, we would really see volumes increasing more. Okay, and we'll really see wave 3 increasing. So in my mind, there is 2 scenarios, okay, over here. One is that this is 1 and 2, and this is 1 and 2. We're going to see 3, 4, and 5. We're going to extend in 3, then we see 4 and 5. So 3 extension, and this is multi-structural move to the upside, okay, is one. And the other one is that this is indeed an ABC, okay, and we're broken above this level, this descending channel, indeed, WX, W, WX, Y, X, and Z. We're going to go all the way down for a triple zigzag instead, okay. So we really need to trade carefully here, because the truth is that both scenarios are still in play. 71 is my level. Okay, if we cross below 71, doesn't necessarily mean that the scenario is invalid, but the chances of this bony multi-structural move to the upside are going to decrease. Okay. Now on gold also moved lower down, but it does much better than euro. We didn't even do the 61.8 Fibonacci retracement. Okay, yes, indeed, we crossed below wave 1, but that doesn't necessarily mean much. Okay, especially when it's part of a larger structure. Okay, what we really care about is that, you know, how much this corrects, and 78.6 is very, very well respected, especially for gold. AB, and look at this, 1, 2, 3, 4, and 1, 2. Looks like we might get some sort of ending diagonal here, guys, for 5. Okay, because we got 5 waves here, but we're still creating lower lows. So that can be ABC, ABC, and 1, 2, 3, 4, 5, and then we'll move lower from 1 more, and then we'll go up, which means this is a flat. Or very likely to get an ending diagonal here, maybe even finish at around 1738 and then move higher. Okay, as always, the risk of that also becoming some sort of, you know, bringing a fresh low, it's high. Okay, we're not saying it's not, but as long as we remain outside this descending channel and above 61.8, we remain biased to the upside. Now the S&P, you remember, like a few sessions back, I changed my analysis. I changed it to something like we're gonna get another leg up and then, you know, and then drop. But since we've crossed below this trend line, guys, which was my diagonal trend line and a channel trend line from the last video, we've got to come back to the original scenario, which was looking at this as, you know, some sort of ending primary 5-wave impulse, which means this is 1, 2, 3, and 4, and that's 1, 2, 3, 4, and 5 in an ending diagonal, which, by the way, looks like it's done. Okay, if we just pull that Fibo there as well, that trend line, look, we have a rejection up here, and then we'll continue lower down, an overthrow in 5, a very nice pattern. That's why obviously originally it was there. So what does this mean now is that very likely we get a correction, okay? And since we are here, okay, what we ought to do is measure that fable over here and take the 38.2 as a potential level. But because we've already drawn our acceleration channel, okay, which is over here, because we've got 1 and 3 and we're waiting for 4, I would also include the 23.6 here, okay, which comes around the previous wave 2, which is also the wave 3, around 42.32. Don't forget that my F4 is very close to 38.2, so I wouldn't be surprised if we get a false break and then continue higher. So yeah, I see further downside here, guys, to be like honest. Okay, and what else we can do is draw this trend line over here, connect those lines together. If we get a break, and that could be fairly soon, we should be looking for 43.50s and then lower down to 42.30s. Okay, now in case we somehow turn up, what this could mean is that this is 1 and 2, this is 3, we're gonna get 4, and then we're gonna get 5. Okay, because this is still a scenario, but in that case, I wouldn't expect the downside to be longer than the 4400s. Okay, otherwise, the diagonal we're looking, it wouldn't look as diagonal. Okay, so that's gonna be all for the day, guys. I hope that has been helpful. I know markets are a bit, they're not giving us really clear direction, guidance at the moment, but we are here and doing as much as we can, as clear as we can, in order to depict the patterns here and understand where the markets could be heading. Thank you for watching, and in case you have any questions, as always, do not forget, you can leave your comment on our YouTube section and I will get back to you as soon as I can. Enjoy the rest of the trading week, and we will speak again tomorrow.